The earnings season may have been a bit muted, but for and on expected lines, but select companies have actually delivered very, very strongly on a number of counts. So Blue Star would probably feature amongst those lists because with a 28% uptick in revenue, though you could argue that maybe that number may have been marginally below what the street was estimating, but on the EBITDA front and the margins front, outperform. It's not just about the quarter that we want to talk to Mr. B Thiagarajan about. We want to really talk about what is in store for the rest of the year and arguably for the rest of the decade as well. As Samina was saying, it kind of enters a golden summer for the year, and maybe we'll see many more golden summers out there. Mr. Thiagarajan, thank you so much for joining in our studios. Pleasure talking to you today.
It is wonderful to be here. Your studio is really impressive.
Thank you so much. As impressive as your numbers have been, sir.
One of the finest studios I have ever been. It's a pleasure to be here and interacting with you and Samira.
Thank you so much. So let's start this off by talking about how much of a pleasure was Q1 for you. The start of the year, people want it to be good. In a quarter marred by lack of activity due to elections, you've delivered reasonably well and very well on the margin front. How did you feel about it?
I think we delivered exceedingly well. As you may recall, before the season we interacted, I had predicted it maybe 25 to 30% growth, and we were surprised to see growth of over 40% in the last week of March, 70% in April, another 70% in May. It tapered off in June. Overall, it is more than 55% growth. The industry did extremely well, and I think it is driven by very harsh summer season. And it is a happening industry. From now on, I think the growth will be significant, and we anticipate that the market size from around 14 million, it may be this year 14 million, to around 30 million by 2030. Mm-hmm. And it is a significant growth that is happening across.
Wow. Sorry, did I hear you say that the industry size could more than double over the course of the decade?
Yeah. By 2030, I think definitely it will be 30 million.
Right. Okay. Sir, you've historically grown more than the industry. And we've seen that every time we've spoken to you, you've created that alpha over industry growth. From what I read and I understand from a little bit of stuff on your earnings, some of the players were unprepared for this massive surge in demand. Were you managed to fulfill the demand that came in this quarter? Because capacity utilization must have been at over 100%, I would have imagined. And hence there could be a little bit of FOMO feeling, given that this golden summer was behind us.
A very intelligent question. I don't think this quarter we would have grown faster than the market, this particular quarter. We were very clear that it will be a 25 to 30% growth. You could have managed another 5%.
At best.
At best. But, March itself, we had to exhaust what was planned for April. Then April, we thought the summer has advanced. See, over the years I'm watching, the peak of the season, what used to happen in the May last week, moved to May middle, moved to May first week, and April. I thought now the season has advanced. See, it was a golden summer for different reasons. There was IPL that was happening. There was election season, and summer was really very hot, and we were excited to fulfill the demand. But then somewhere in May middle, we couldn't
catch up.
So there could be players, there could be other brands who would have filled in that gap. But so therefore our growth was not more than the industry.
So that brings me to my next question. A golden summer and a rather golden monsoon. We've actually had a really solid monsoon, and rural India is now picking up. I know that your demand for rural India usually perks up in the festive season, which is very closely related to how well the monsoons have done. How ready are you in terms of fulfilling the demand that may come potentially from rural India in this quarter?
We are very well prepared, but I keep telling myself and our team that it is better to look at the long term rather than the quarter. For the simple reason.
Because this is not organic then, right? It is sporadic.
But then you will miss it if you are looking at the quarter. You have to look at what is coming in the future, how you have to prepare for.
Right.
That has been the DNA of Blue Star,
Yeah.
that get the fundamentals right, you will perform definitely well. So you look at this, that more than 95% of the buyers are first-time buyers.
Okay.
And the penetration levels today are around 7%. It is expected to more than double going forward. Air conditioner as a category is not one per home, it can be multiple in a home. More than 55% this summer season bought air conditioners through consumer finance. 65% of the sale is coming from tier 3, 4, 5 town. More than 80% are entry-level products, and the 3-star, 2-star air conditioners account for close to 70% of the consumption. So in India, if you have to succeed, you have to have affordable products, and therefore we repositioned ourselves to offer that affordable. At the same time, India is a market where many things coexist. So you cannot ignore affordable premium or premium segments as well. And the next part is concerned with the channels itself. You have different types of channels coexisting. It will not happen in Europe or United States. You have single outlet stores, you have modern retail, you have got e-commerce, you have got distributors. All of this coexist today. And the consumers whom you are dealing with from different markets demand different things actually. So if the growth is going to be so much in the coming years, how are we going to innovate in order to keep the product differentiated in terms of energy efficiency, reliability?
And retain market share in that same
That's right.
Yeah.
And our goal is to get to 15% market share, which should have happened
You're at about 13.5, 14 right now? 13.9.
13.75. So we should have reached 15 by FY25. We are now saying FY26 we will reach there.
Mr. Thiagarajan, how do, I mean, let's assume the units that we spoke about, the doubling of the market size itself, etc. Would companies like you need to innovate as a necessity in order to reach that 15% market share, or would that happen naturally because you do have a good brand? My limited point is, based on demand supply, you reckon growth is easy to get relatively, or would you need to strive hard on multiple fronts in order to be able to get growth and growth in market share both?
If it is a happening industry and so much of revenue to be earned, profit to be made, it's going to be fiercely competitive.
Sure.
So it's not the question of getting into playing 11. And then if you are a batsman, whether you are in that 5, and we are part of that 5.
Yes.
And how to get to 3. And therefore, you have to be very clear in terms of building your competitiveness. For that, product innovation is the first step.
Okay, the reason why I actually asked this more is because multiple notes say that they draw comfort from your strategy, and I don't know if it's a pivot, but your strategy of pursuing profitability and cash flows at the current point of time. So my question therefore is that would it need to be fiercely innovative in order to gain market share? Because usually companies which are working on profitability and free cash flow don't keep as strong an eye on the top line as on these factors. I know you will say you have an eye on all, but where is the first port of call? Profitability and free cash flow or market share?
So as I age and mature, I will wake up and go to sleep with this question. If you are serving the investors, it is profitability and cash flow leadership. As far as the consumer is concerned, whether your product is superior, it is reliable, you are providing extraordinary customer service, and it is coming at a price and value for money. That's how the consumer looks at it. So you need to first build that. For that pillar is very much important. The second pillar is about that if I have to ensure that I'm part of an industry which has to grow responsibly. Look, this growth, whether India will be able to provide power when especially 50% of the energy will have to come from renewables. We don't want a situation, you know, I had grown up in this industry for more than 4 decades, that summer will come, there will be power cut and sale will be impacted. It's not uncommon for us to explain to the management there was power cut, we couldn't sell. We don't want that. If that is so, the industry will have to work harder. The third part is connected with what is the return that I will provide. It's a capacity utilization. It is the improved profits. Again, to provide great returns, you need to invest in R&D. The materials are not going to be easily available. Okay. Copper, for example, and steel, microprocessor. These are emerging industries. The component ecosystem is not yet complete.
Right. So, you know, one thing that stood out for us was while you might have not gained more than the market in the last quarter, your margins have improved significantly. And I know you've talked about this for the last year or two where you're working on operational efficiency. Now, MEP in central air conditioning margins have improved, and so has it been for room AC and commercial refrigeration. For the rest of the financial year, do you think you could maintain the 9.5% margins, or am I being too ambitious? Because we've seen a big uptick from 6.5 to 8.5.
So the first thing is connected with scale. The second one is the value engineering, research and development related innovations with what had gone into. The backward integration initiative, these are all resulting in this. The margin guideline for segment 1 is between 7 and 7.5%.
For F5, for the rest of the year?
For the rest of the year. And we have said that it could be around 8.5% for segment 2.
Okay, so the average would be close to about 8% for the rest of the financial year.
That's right. Having said all this, we are also really concerned about, that's why I said that there is no point in worrying over a particular quarter. The geopolitical issues that are developing, it's a matter of concern actually. You know,
you've invested extensively in capex, and like you indicated to us as well, you can't get your eyes off R&D, technology, digitization. That is the big theme to work with. How much have you earmarked for expansion this year, and how would you look to fund it? Because you've significantly reduced your debt as well recently.
Yeah, the quarter ended 30th June, we had surplus cash in hand.
Yes.
It's because of the QIP.
Okay, so that's
the last year we raised the QIP, keeping in mind that there is need to invest in manufacturing. There are investments that are required in research and development. There are investments that are required in digitalization, including machine learning, AI, etc.
So by FY26, where do you see capacity at? Because demand is not a problem in your industry. Now it's all about just playing catch up on supply side.
FY26, we would have reached more than 15 million.
Wow. I'm clearly very fascinated by your company, but thank you very much. So it's indeed a pleasure to have you in the studio, talk to us about Blue Star, the landscape, and like Sir said, it's a hot industry. You can't get your eyes off it. Happening and hot as well. We just had a heat wave behind us, but yes, very happening. The stocks have also been on the move. The earnings have been fantastic. The outlook also looks rather promising. And of course, Blue Star aspires to hit that 15% market share by next financial year.